Well, it's post market October 23rd, 2009, and it has been another exciting day in trading. Today the markets closed down. Had a feeling it could have did that, although I would have rather them close up. Most of the downward pressure was due to a rally in the dollar. You could see that right here on the hourly. We tested that line I talked about on the midday and the morning analysis. We put a double top in, and we're looking like we should decline. So going into Sundays, well, the rest of today, the equity should trade going into like 5, 6 o'clock Central Standard Time. Pick back up around Sunday and continue into Monday. The E-mini futures trade 24 hours is why, even though the markets close on at 3 o'clock Central Standard Time. But anyway, the dollar should go ahead and fall from here. I'm looking for it to go ahead and get back in um this downward wedge and break lower below the 75 handle. As far as the S&P 500s are concerned, they're looking pretty bearish. They should go ahead and rally, and that would be good for especially the tech stocks on the back of Amazon. Amazon did exceptionally well today, rallying 25%. I went ahead and closed out my Google position and opened up some Amazon into the weekend. So as it stands, I'm holding Baidu and Baidu and Amazon. Baidu reports earnings, I think Monday before or after the close. It doesn't really matter. It should be due for a good pop as internet advertisement is, a pretty profitable business to be in. Breaking it apart, going intraday into the 5 minute. We um we started up, this is where the markets closed in this area on Thursday. We stayed in that level, opening a little higher, basing up here. We found resistance around the 1095 mark, and we went ahead and sold off for from midday until the close. We started looking a little like we could pick up some ground, but that went ahead and sold off as well. Uh, I'm not really sure how it's gonna trade this weekend. It doesn't really matter. I'll make a weekend video probably Sunday night, going into Sunday morning. We'll just pick up from here. As far as the indicators and how they're concerned, the VIX, which is the fear indicator, it represents how much selling pressure you have as far as the put call ratio as far as options. It's testing away at the 100 EMA. If it fails here, that would be pretty good for the markets. And we should get a downward tick on the MACD. The dollar, we talked about that already. And as far as Amazon, beautiful action, beautiful action. This is the monthly. This is this month right here. If we go ahead and zoom in to the daily, we gapped up like real high. Zooming in, we may go sideways on MACD, but I'll probably get off this position that I'm holding around the around 120 to 125 area, and go ahead and call that quits on because they're looking pretty, like they could turn around. I probably entered the position too early, but you shouldn't chase stocks like I did. I'll just trade around the position as far as Monday is open and see if I could, scalp a couple of points. But I didn't mean to do that. Go ahead and take that back off. What I wanted to show you was the pre and post market data right here. Right now we're basing sideways. The markets are closed. That's what this gray area represents. And if we could just go sideways while the MACD declines, that would be pretty bullish to my eye. But I guess that's enough for the equities and the trend. We could look at the trend before I go. Yeah, it's selling off nicely, and that's bullish for the markets. I would love to get back down here below the one. That would mean a nice huge rally. Basically, I'm looking for a rally because a lot of companies in the Dow 30 and the S&P 500, they're reporting some stellar earnings. As far as what they did for the third quarter. We're going in the fourth quarter, which should be pretty bullish as far as retail is concerned, with consumer spending should picking up into the holiday seasons. The dollar, we're on a zero interest rate policy. I don't see them changing that anytime soon, so the dollar should go ahead and decline. And I'm looking for a huge rally going into the first of the year. Going into the end of the year, first of 2010. Coming out of this recession, this time last year, I don't know if you guys remember, but we were pricing in not only a depression, but a huge recession. There was, in our wildest dreams, we would not have imagined that the S&P would be where it is today. If we go back and we look at a weekly, going back to this time last year, October, we were here. We sold off huge. This is a huge sell-off, all the way down to the 666 area, and we've been climbing ever since, chopping away at these EMAs. I'd like to continue to do that, and I'm knowing that once we get past this 200-week EMA, well, that we should get some spikes equivalent to this motion, but on the upside. This week we closed flat. I'm looking for next week for if we could just hold above this 100 EMA, heading towards the 200. Well, that'll be a pretty profitable experience. Well, later traders, ODK out, trade well, trade smart, and trade